So $6 billion in Swiss bank accounts linked to Trump just got frozen by Swiss authorities. Money held in Switzerland's legendary secret banking system, now completely locked down and inaccessible, with Swiss government cooperating with United States authorities to freeze accounts that wealthy individuals traditionally use to hide assets from scrutiny, revealing offshore wealth that public didn't know existed, while simultaneously making that wealth inaccessible, creating a situation where have billions of dollars sitting in Swiss vaults but cannot access any of it, cannot transfer funds between accounts, cannot withdraw cash, cannot use money for any purpose with funds frozen indefinitely, pending resolution of international investigations. And Warren Buffett, who has understood for 7 decades how international banking works and why Switzerland represented unique sanctuary in global financial system, just explained why Swiss account freezing represents ultimate signal of international isolation, because Switzerland was the jurisdiction that never cooperated with foreign authorities, the banking system that maintained absolute secrecy, protecting clients regardless of outside pressure, the last refuge where wealthy individuals could hide assets, knowing Swiss banks would never share information with anyone, and when even Switzerland freezes your accounts and cooperates with foreign governments, it signals that no offshore haven remains anywhere, no international banking secrecy can protect you, no geographic distance provides financial shelter, because entire international community has coordinated to isolate you financially, leaving no country willing to provide sanctuary for your wealth. It's honestly stunning to understand what Swiss account freezing actually means in terms of both wealth revelation and financial isolation. This isn't domestic U.S. bank accounts being frozen where accounts were always subject to U.S. legal jurisdiction, but rather Swiss accounts in Switzerland that were supposed to be protected by Swiss banking secrecy laws and geographic distance from U.S. enforcement, now being frozen through unprecedented international cooperation between Swiss and U.S. authorities. The $6 billion represents offshore wealth that public didn't know existed, money held secretly in Swiss accounts away from U.S. scrutiny, never reported publicly, hidden from view using Switzerland's famous banking privacy laws that historically prevented Swiss banks from sharing any information about account holders with foreign governments. Now that offshore wealth is revealed through Swiss cooperation, making public aware that $6 billion was sitting in Swiss accounts, and simultaneously that wealth is locked down frozen, making it completely inaccessible to Trump even though technically still belongs to him, creating unique limbo state where have enormous wealth but cannot touch it. Swiss authorities implemented account freeze at request of U.S. prosecutors investigating financial conduct, with Swiss banks complying immediately, locking down all accounts linked to Trump, preventing any transfers, withdrawals, or transactions while investigations proceed. The cooperation represents a dramatic break from Swiss banking tradition of absolute secrecy. Historically, Switzerland refused to cooperate with foreign authorities regardless of allegations, maintained client confidentiality against all outside pressure, served as safe haven precisely because Swiss banks would never share information, making Switzerland the jurisdiction of last resort for offshore wealth. And trust me, when you hear exactly what Switzerland's unique role in international banking has been historically and why Swiss banking secrecy mattered more than any other offshore jurisdiction, what $6 billion frozen in Switzerland represents both in terms of hidden wealth revealed and financial capability lost, what Buffett said about why Swiss cooperation signals that no safe havens remain anywhere when even Switzerland breaks its tradition of absolute secrecy, what difference between frozen and seized means practically and psychologically, creating worse limbo than outright seizure would, how international coordination to freeze Swiss accounts demonstrates global reach of enforcement that geographic distance cannot defeat, and why Switzerland falling as last offshore refuge means wealthy individuals have nowhere left to hide assets from international scrutiny. You'll understand why this represents not just another asset freeze but ultimate international financial isolation, where a country that never cooperated is now cooperating, signaling that entire world has coordinated against you, leaving no sanctuary anywhere. This wasn't domestic enforcement, but international banking secrecy collapse, destroying last financial refuge. Let me fill you in on exactly what Switzerland's unique role in international banking has been historically, and why Swiss banking secrecy mattered more than any other offshore jurisdiction according to centuries of Swiss financial tradition. Switzerland developed legendary banking secrecy over centuries, becoming world's premier safe haven for offshore wealth, according to historical banking practices. Swiss banking secrecy laws dating back to 1930s made it criminal offense for Swiss banks to reveal information about account holders. Banks could not share client information with anyone, not foreign governments, not law enforcement, not anyone, without facing criminal prosecution under Swiss law. The legal protection meant that money deposited in Swiss banks stayed secret, absolutely. Account holders could rest assured that Swiss banks would never reveal their accounts to outside authorities. The secrecy was so absolute that Swiss banks served dictators, corrupt officials, tax evaders, and anyone else wanting to hide wealth, knowing Switzerland would never cooperate with foreign investigations. Switzerland's geographic position and neutrality enhanced its appeal as financial sanctuary according to political factors. Switzerland's famous neutrality meant it didn't take sides in international conflicts or cooperate with foreign powers on enforcement matters. Located in heart of Europe but politically separate, Switzerland provided stable jurisdiction that wouldn't be pressured by geopolitical considerations. The neutrality combined with banking secrecy made Switzerland an ideal location for hiding wealth, political stability, legal protection, absolute confidentiality, no cooperation with foreign authorities. Wealthy individuals from around the world moved money to Switzerland knowing it would be protected there. Swiss banks historically refused cooperation even in criminal matters according to protection principles. Foreign governments investigating embezzlement, fraud, corruption, tax evasion would request information from Swiss banks about suspect accounts. Swiss banks routinely refused all requests citing Swiss banking secrecy laws. Didn't matter how serious the alleged crimes, Swiss banks maintained client confidentiality against all outside pressure. The absolute refusal to cooperate made Switzerland the jurisdiction of last resort. When wanted to hide money from any authority, moved it to Switzerland knowing Swiss banks would never share information. Switzerland represented last refuge when other offshore havens fell according to hierarchy of secrecy. Other jurisdictions like Cayman Islands, Luxembourg, Panama also offered banking secrecy but were more vulnerable to international pressure. These jurisdictions eventually started cooperating with foreign authorities when pressured, but Switzerland held out longest, maintaining absolute secrecy when others were crumbling. As other havens fell, Switzerland remained as final safe haven, the jurisdiction that never cooperated no matter what. Wealthy individuals relied on Switzerland as ultimate backup, knowing that if every other offshore option failed, Swiss accounts would still be protected. Understanding what $6 billion frozen in Switzerland represents reveals both massive hidden offshore wealth and dramatic break from Swiss banking tradition. The $6 billion amount represents enormous offshore wealth that public didn't know existed, according to revelation of hidden assets. Trump's known domestic wealth in the United States has been public knowledge through property holdings, business operations, public disclosures. But $6 billion in Swiss accounts was hidden wealth never disclosed publicly, never included in public net worth estimates, kept secret using Swiss banking privacy. The revelation that $6 billion was sitting offshore shows extent of hidden wealth, massive parallel financial holdings beyond what was publicly known. Public now aware that wealth extends far beyond visible domestic holdings into secret offshore accounts. The offshore placement reveals deliberate wealth concealment strategy according to why money goes to Switzerland. Don't accidentally have $6 billion in Swiss accounts. It's there because deliberately moved money offshore to hide it from scrutiny. Swiss accounts serve specific purpose of keeping wealth secret from U.S. authorities, tax officials, creditors, legal opponents, public view. The $6 billion in Switzerland represents intentional use of offshore banking secrecy to conceal wealth. Can now see that wealth concealment wasn't minor activity, was operating at scale with billions hidden offshore, suggesting systematic strategy of moving wealth to secret accounts. The freeze reveals Swiss cooperation that historically would never have happened according to dramatic tradition break. Under traditional Swiss banking secrecy, U.S. authorities could request information about accounts forever, and Swiss would refuse. Could allege any crimes, could provide any evidence. Swiss banks wouldn't share information about accounts. But now Swiss authorities actually froze accounts at U.S. request, didn't just share information, took active step of locking down accounts, preventing access. The cooperation is unprecedented, showing how dramatically international environment has changed. Switzerland cooperating signals complete breakdown of banking secrecy that country was famous for maintaining. The account access denial creates complete financial isolation despite having wealth according to frozen status impact. $6 billion exists in Swiss accounts. Money is there, belongs to Trump, technically hasn't been seized or taken, but cannot access it, cannot transfer funds out of accounts, cannot withdraw cash, cannot use money for any purpose. Have billions of dollars but might as well have $0 in terms of practical access. The inaccessibility despite ownership creates unique financial paralysis where wealth cannot benefit you because locked away. Warren Buffett's response to the Swiss account freezing came this evening in comprehensive statement reflecting his lifetime understanding of international banking and why Swiss cooperation represents historic inflection point. The 94-year-old investor who has observed international financial systems for 7 decades and understands how offshore banking secrecy worked said something that perfectly captures significance of Swiss accounts being frozen. He said Switzerland represented special case in international banking, was the jurisdiction that maintained absolute banking secrecy when all others were compromising, was the safe haven that refused cooperation when others were caving to pressure, was the last refuge that wealthy individuals could rely on when every other offshore option had become unreliable. Swiss banking secrecy wasn't just banking policy, it was matter of Swiss national identity and economic strategy. Switzerland built international financial center around promise of absolute confidentiality. For Switzerland to freeze accounts and cooperate with foreign authorities represents not just policy change but abandonment of fundamental principle that defined Swiss banking for centuries. When Switzerland cooperates, signals that no safe haven remains anywhere, because if jurisdiction most committed to banking secrecy is now cooperating, every other jurisdiction will certainly cooperate, meaning wealthy individuals have nowhere left to hide assets internationally. The international coordination required to freeze Swiss accounts demonstrates global reach of enforcement, according to Buffett's framework about multinational cooperation. Switzerland is a sovereign nation with own laws and policies. For Switzerland to freeze accounts at U.S. request required diplomatic coordination, legal cooperation between jurisdictions, mutual legal assistance treaties being activated, international law enforcement coordination across continents. The successful international coordination shows that geographic distance provides no protection when countries cooperate. Trump might have thought $6 billion in Switzerland was safe because Switzerland far from U.S. enforcement reach, but international cooperation allows U.S. authorities to reach assets anywhere when foreign governments are willing to assist. The Swiss cooperation proves that no distance is far enough when international community coordinates enforcement. The Switzerland falling as last offshore refuge means nowhere remains for hiding wealth according to domino effect of jurisdiction cooperation. If Switzerland, most protective of offshore havens, is now cooperating with foreign authorities, signals that every other jurisdiction will cooperate. Cayman Islands, Luxembourg, Monaco, Singapore, any offshore banking center seeing Switzerland cooperate knows they cannot resist pressure if Switzerland couldn't. The domino effect means that Swiss cooperation destroys entire offshore banking secrecy system. Wealthy individuals who relied on some jurisdiction somewhere maintaining secrecy realize that no jurisdiction can be relied on anymore. The international consensus against banking secrecy has become so strong that even Switzerland has yielded. So here's where everything stands. $6 billion in Swiss bank accounts frozen. Swiss authorities cooperating with U.S. prosecutors. Accounts completely inaccessible. Cannot transfer, withdraw, or use funds. Massive offshore wealth revealed that public didn't know existed. Switzerland's unique historical role made this cooperation particularly significant. Legendary banking secrecy over centuries. Never cooperated with foreign authorities historically. Last refuge when other havens fell. Absolute protection for wealthy hiding assets. That tradition now broken. Warren Buffett explained that Swiss cooperation signals no safe havens remain anywhere. If Switzerland freezes accounts and cooperates, every jurisdiction will. Geographic distance cannot protect wealth when international community coordinates. Last offshore refuge has fallen. Nowhere left to hide assets internationally. $6 billion represents enormous hidden wealth and deliberate concealment strategy. Offshore accounts kept secret from public view, now revealed, showing parallel wealth beyond known holdings. Intentional use of Swiss secrecy for asset concealment at massive scale. This tests whether Swiss banking secrecy can survive international pressure, whether geographic distance protects offshore wealth, whether Switzerland maintains traditional refusal to cooperate, and whether Buffett's framework proves accurate that Swiss account freezing represents international isolation where no safe havens remain when even Switzerland breaks centuries-old tradition of absolute banking secrecy. Understanding the crucial distinction between frozen and seized accounts reveals why frozen status creates unique psychological limbo that's worse than outright seizure in important ways. Frozen accounts mean money still belongs to you technically according to legal ownership. Swiss authorities didn't seize accounts transferring ownership to government. Didn't confiscate funds taking them permanently. Instead froze accounts leaving ownership with Trump, but blocking all access. On paper, $6 billion still belongs to him. Legal title hasn't changed. From ownership perspective, still his money. But ownership without access is essentially meaningless. Cannot benefit from money you cannot touch. Cannot use wealth you cannot access. Cannot leverage assets that are locked away. The technical ownership without practical access creates hollow legal status. Cannot access frozen funds for any purpose, creating complete inaccessibility according to freeze mechanics. Every bank has online systems for transferring funds, ATMs for withdrawing cash, wire transfer capabilities for moving money. All of these access methods are blocked when accounts are frozen, login credentials don't work, transfer requests are denied, withdrawal attempts are rejected, cannot write checks against frozen accounts, cannot use debit cards linked to accounts. Every method of accessing money is shut down. The comprehensive inaccessibility means $6 billion sitting in Swiss banks might as well not exist from practical utility perspective. Freeze duration is indefinite, with no clear end date according to uncertainty of status. When assets are seized, know they're gone. Have certainty even if bad news. But when assets are frozen, don't know how long freeze will last. Might be weeks, might be months, might be years, might be permanent. Swiss authorities froze accounts pending U.S. investigations, but investigations have no fixed timeline, could drag on indefinitely. The indefinite uncertainty about whether we'll ever regain access is psychologically worse than knowing assets are permanently gone. Cannot plan around frozen assets because don't know their future status. Frozen status might eventually become seizure, making freeze stepping stone to permanent loss according to progression risk. Swiss authorities froze accounts first step. If U.S. prosecutors eventually prove wrongdoing in court, might then seize accounts, converting freeze to permanent confiscation. The freeze doesn't guarantee we'll ever get money back, might be temporary measure before permanent seizure. Everyday accounts remain frozen, risk increases that freeze becomes permanent. The progression possibility means frozen status offers no comfort or security about eventually regaining access. The psychological impact of frozen wealth exceeds seized wealth according to proximity torture. When assets are seized, experience loss and can begin grieving and moving on, can focus energy on other opportunities, can accept loss and adjust. But when assets are frozen, cannot move on because money's still technically yours, cannot stop thinking about $6 billion sitting in accounts you cannot access. No money is there, know it belongs to you, but cannot touch it. The proximity torture, having wealth but not having access, is psychologically worse than clean loss of seized assets. Cannot grieve and move on because loss isn't permanent yet. Cannot celebrate still having wealth because cannot access it. Stuck in limbo that's mentally more difficult than either extreme would be. Understanding how international cooperation actually worked to freeze Swiss accounts reveals coordinated global enforcement that geographic distance cannot defeat. The United States initiated process through Mutual Legal Assistance Treaty with Switzerland according to international law mechanisms. U.S. and Switzerland have treaty allowing legal cooperation on criminal matters. U.S. prosecutors investigating financial conduct submitted formal requests to Swiss authorities asking them to freeze accounts linked to Trump. Included evidence supporting request, explained legal basis, provided account identification information. The treaty framework created legal pathway for U.S. to request Swiss action despite Swiss accounts being outside direct U.S. jurisdiction. Swiss authorities evaluated requests and decided to comply according to sovereign decision. Switzerland, not required to honor every request, evaluates each based on evidence and legal standards. Could have refused if request didn't meet standards or if wanted to maintain banking secrecy tradition. But Swiss authorities reviewed U.S. request and decided evidence sufficient to warrant freezing accounts. The sovereign Swiss decision to comply represents policy choice to cooperate rather than maintain traditional secrecy. Swiss government weighed cooperation benefits against banking secrecy tradition and chose cooperation. Swiss banks immediately implemented freeze, blocking all account access according to execution. Once Swiss government ordered freeze, Swiss banks had no choice but comply with own government's directive. Banks locked down accounts linked to Trump, disabled online access, blocked transfer capabilities, prevented withdrawals. Swiss banks that historically would have fought to protect client confidentiality instead quickly implemented freeze because own government ordered it. The swift implementation shows Swiss banks follow government directives even when contradicts banking secrecy tradition. Other countries monitoring Swiss cooperation will follow precedent according to international norm creation. When major financial center like Switzerland cooperates with foreign authorities on account freezing, creates expectation that other jurisdictions will also cooperate. Countries watching Swiss action see that even jurisdiction most committed to banking secrecy is cooperating, creates new international norm where all countries expected to cooperate on financial enforcement. The precedent effect means Swiss cooperation triggers broader breakdown of offshore banking secrecy globally. Understanding what frozen accounts mean practically for wealth utility reveals complete financial paralysis despite paper wealth. Cannot pay legal fees from frozen Swiss accounts according to expense access. Defending against legal challenges requires paying lawyers enormous fees. Would naturally want to use $6 billion in Swiss accounts to pay legal defense costs, but cannot access frozen funds for any purpose including legal fees. Must find other resources to pay lawyers or go without legal defense. The inability to use own wealth for legal defense creates cruel irony. Have billions but cannot use them to defend having them. Cannot pay business expenses or maintain operations according to operational funding. Businesses require constant cash flow for operations, paying staff, vendors, overhead, investments. would naturally use Swiss accounts to fund business operations, but frozen accounts provide zero operational funding. Cannot transfer money from Swiss accounts to business accounts. Cannot use Swiss wealth to maintain business empire. Must find other funding sources or let businesses fail for lack of capital despite having billions offshore. The operational paralysis from frozen accounts damages business interests separately from legal issues. Cannot liquidate or restructure frozen assets according to financial management inability. Might want to sell investments held in Swiss accounts, restructure holdings, move money between different assets for better returns or lower risk. All financial management activities blocked when accounts frozen. Cannot give instructions to Swiss banks about investments. Cannot authorize trades or transfers. Wealth sits static in whatever form it was when frozen, unable to be managed or optimized. The financial management paralysis means wealth deteriorates from inability to actively manage it. Cannot use frozen wealth as collateral for borrowing according to lending impossibility. Often wealthy people don't spend wealth directly. They borrow against it using assets as collateral. Banks lend knowing borrower has assets backing loan, but cannot use frozen assets as collateral because lenders know frozen assets are inaccessible. Frozen $6 billion cannot secure loans because lenders cannot seize frozen assets if loan defaults. The collateral impossibility means frozen wealth provides zero borrowing power, reducing effective wealth to zero for lending purposes. Warren Buffett provided comprehensive additional analysis explaining why frozen offshore wealth represents worse situation than many other financial setbacks. Buffett explained that financial setbacks come in different varieties with different recovery possibilities. Lose money in bad investment, can potentially earn it back through better investments. Have assets seized domestically, can potentially acquire new assets to replace them. Face financial judgment, can potentially satisfy judgment and move forward. These domestic financial setbacks, while painful, occur within single legal system where rules are clear and remedies are available. Can understand situation, plan response, work toward recovery within familiar legal framework. But frozen offshore wealth is a different type of problem according to international complexity. Trapped between two legal systems. Swiss system that froze accounts and U.S. system that requested freeze. Must navigate both Swiss law and U.S. law to resolve. Swiss courts might eventually unfreeze accounts if challenge freeze successfully in Switzerland. But U.S. prosecutors might then seize accounts if proved wrongdoing in U.S. courts. Cannot simply win in one jurisdiction and be done. Must win in all relevant jurisdictions simultaneously. The multi-jurisdictional complexity makes resolution far more difficult than domestic financial problems. The international coordination against you demonstrates global isolation according to what Swiss cooperation signals. When Switzerland, country that built financial center on banking secrecy, cooperates with U.S. to freeze accounts, shows that international community united in enforcement. No division between countries that you can exploit, no jurisdiction that will provide sanctuary, all major countries coordinating together to enforce against you. The global coordination creates complete isolation where no country willing to help because all countries working together against you. So, here is comprehensive situation analysis. $6 billion frozen in Swiss bank accounts. Technically still owned but completely inaccessible. Cannot transfer, withdraw, use for any purpose. Indefinite freeze with no clear end date. Might eventually become seizure. Frozen different from seized. In creating psychological limbo, seized would be permanent loss you could grieve and move past. Frozen is indefinite uncertainty. Don't know if we'll ever access again. Proximity torture of having wealth but not accessing it. Psychologically worse than clean loss would be. International cooperation between U.S. and Switzerland unprecedented. Mutual legal assistance treaty provided framework. Swiss government decided to comply, abandoning banking secrecy tradition. Swiss banks implemented freeze immediately. Creates precedent other countries will follow. Frozen accounts provide zero practical utility, cannot pay legal fees, business expenses, anything. Cannot manage or restructure investments, cannot use as collateral for borrowing. $6 billion exists but is completely useless. Effective wealth reduced to zero for practical purposes. Warren Buffett explained multi-jurisdictional complexity makes resolution nearly impossible. Must win in all relevant jurisdictions. International coordination demonstrates global isolation. No sanctuary anywhere when all countries cooperating. This proves frozen offshore wealth worse than many financial setbacks. That Swiss cooperation signals no safe havens remain. That geographic distance cannot protect when international community acts together, and validates Buffett's framework that Swiss account freezing represents ultimate international isolation where last refuge has fallen. Understanding how other offshore havens are at risk following Swiss cooperation reveals domino effect destroying entire offshore banking secrecy system globally. Cayman Islands will certainly cooperate if Switzerland did, according to jurisdiction hierarchy. Cayman Islands is British overseas territory that has provided offshore banking services but always been more vulnerable to pressure than Switzerland. If Switzerland, with its centuries of independence and banking secrecy tradition, is cooperating, Cayman Islands has no basis to refuse cooperation. British government can pressure Cayman to cooperate. International community can threaten sanctions. Cayman, seeing Switzerland cooperate, knows resistance is futile, will cooperate with foreign authorities when requested following Swiss precedent. Luxembourg and Monaco face same pressure to cooperate according to European jurisdiction vulnerability. Luxembourg built financial sector partly on banking privacy. Monaco attracted wealth through tax advantages and discretion. But both are small European jurisdictions without Switzerland's historical independence or commitment to secrecy. If Switzerland fell, Luxembourg and Monaco cannot hold out. European Union can pressure both jurisdictions. International banking standards demand cooperation. Neither has Switzerland's tradition of absolute secrecy to defend. Will cooperate when pressured following patterns Switzerland established. Singapore and Hong Kong will follow international norms according to Asian financial center pressures. Singapore and Hong Kong compete to be Asia's financial centers. Both provided some banking privacy to attract deposits. But both also want to be respected international financial centers, not pariah havens. Saw what happened to Switzerland's reputation when maintained secrecy too long. Will cooperate with foreign authorities to maintain international standing. Cannot afford to be labeled non-cooperative jurisdictions. The reputational pressures ensure Asian financial centers cooperate when requested. No jurisdiction can resist international pressure if Switzerland couldn't. According to universal vulnerability, Switzerland was strongest case for banking secrecy, independent country. Centuries of tradition, national identity built on financial privacy, economic model dependent on attracting deposits. If Switzerland couldn't resist pressure to cooperate, no other jurisdiction has stronger position. Every offshore haven is more vulnerable than Switzerland was. The Swiss cooperation proves that international pressure overcomes any jurisdiction's resistance, making all offshore havens unreliable for hiding wealth. Understanding why cannot rebuild offshore sanctuary reveals permanent destruction of wealth, concealment capability. Takes decades to establish offshore banking relationships according to relationship development timelines. Moving $6 billion to Swiss accounts wasn't an overnight decision. Took years of building relationships with Swiss banks, finding Swiss bankers willing to take accounts, establishing trust, transferring funds gradually, structuring accounts for privacy. The relationship building process takes extensive time that cannot be compressed, cannot quickly rebuild offshore network that took decades to establish. All offshore jurisdictions now on alert about potential client problems according to reputational risk sensitivity. Swiss banks froze accounts when requested by authorities, damaging relationship with client. Other offshore banks saw this happen. Now wary of taking accounts from anyone who might have legal problems. Don't want to accept deposits that might eventually be frozen, damaging bank's relationship with depositor and requiring bank to cooperate with foreign authorities. The risk aversion means offshore banks much less willing to accept new accounts from potentially problematic clients. International banking standards now require reporting and cooperation according to regulatory evolution. International initiatives like Common Reporting Standard require banks to share information about foreign account holders with their home countries. Tax havens that don't comply face sanctions and exclusion from international banking system. The regulatory environment has shifted from protecting secrecy to requiring transparency. Cannot find jurisdiction that will maintain secrecy when all jurisdictions are required to cooperate under international standards. Geographic distance no longer provides protection according to enforcement globalization. In past could hide wealth in distant jurisdiction assuming foreign authorities couldn't reach it. But international cooperation agreements and mutual legal assistance treaties allow authorities to reach assets anywhere. Distance from New York to Switzerland is irrelevant when Swiss authorities cooperate with U.S. requests. Cannot find jurisdiction far enough away to be safe because enforcement is now global. The distance protection is obsolete in era of international coordination. The historical context of Swiss banking secrecy ending reveals how dramatically international financial environment has shifted. Swiss banking secrecy began in 1930s to protect privacy and attract deposits according to Origin's story. Switzerland passed laws making it criminal for banks to reveal client information, intended to protect political refugees and Jewish families from Nazi persecution. Also attracted wealth from around the world seeking privacy. Built Swiss financial sector into major international center. Banking secrecy became point of Swiss national pride and economic strategy, For nearly a century, Switzerland maintained this tradition despite all pressure. International pressure mounted for decades to break Swiss secrecy according to escalating demands. The United States and other countries demanded Switzerland cooperate on tax evasion, money laundering, criminal investigations. Swiss resisted pressure, citing banking secrecy laws and national sovereignty, refused to share information about accounts even in serious criminal cases, maintained that banking secrecy was fundamental Swiss principle. The resistance lasted through multiple waves of pressure showing Swiss commitment to secrecy. Swiss resistance finally collapsed under sustained international pressure, according to capitulation timeline. In past decade, international communities significantly increased pressure on Switzerland, threatened sanctions, demanded transparency, made cooperation condition of participating in international financial system. Swiss banks faced prosecution in foreign jurisdictions. Switzerland gradually yielded, first creating exceptions to banking secrecy, then expanding cooperation, finally abandoning secrecy tradition in most cases. The capitulation showed that even Switzerland couldn't resist unlimited pressure.
Current Swiss cooperation on Trump accounts represents complete abandonment of banking secrecy tradition according to final breakdown. Previous Swiss cooperation was reluctant and limited, but freezing accounts linked to Trump shows Switzerland now fully cooperating with foreign authorities without maintaining even pretense of banking secrecy. Swiss government acts quickly on U.S. requests. Swiss banks implement freezes immediately. No defense of client privacy or banking tradition. The complete abandonment shows Swiss banking secrecy is dead, exists only in historical memory, not current practice.
Warren Buffett's final comprehensive statement synthesized all dimensions of why Swiss account freezing represents ultimate international financial isolation that cannot be escaped or overcome. Buffett stated that wealthy individuals historically had option to move assets offshore to jurisdictions that would protect them from enforcement. If facing legal troubles in home country, could move money to Switzerland or other haven knowing offshore jurisdiction wouldn't cooperate with home country authorities. Geographic diversity of wealth provided protection because international system wasn't unified. Different countries had different laws and different priorities, and wouldn't necessarily help each other enforce. The fragmented international system allowed wealthy individuals to exploit divisions between jurisdictions, finding sanctuaries for wealth. But international financial system has fundamentally changed according to coordination evolution. Countries now cooperate extensively on enforcement through treaties, agreements, international standards. Information sharing is mandatory, not optional. Jurisdictions refusing cooperation face sanctions and exclusion. The unified international approach means cannot exploit divisions between countries because divisions have been eliminated through coordination. Nowhere to hide when entire international community acting together with common enforcement framework. Switzerland freezing accounts proves geographic sanctuary is obsolete according to what Swiss cooperation demonstrates. Switzerland represented belief that some jurisdiction somewhere would provide protection regardless of international pressure. If faced enforcement at home, could move assets offshore, trusting distance and foreign sovereignty would protect. But Swiss cooperation proves this belief is obsolete. If Switzerland cooperates, every jurisdiction cooperates. No distant country will provide sanctuary. No foreign bank will protect against coordinated international enforcement. The geographic sanctuary strategy is dead. So here is ultimate, final, comprehensive, definitive verdict on Swiss account freezing, representing international financial isolation. $6 billion frozen in Swiss bank accounts. Switzerland cooperating with U.S. authorities, abandoning centuries of banking secrecy tradition. Accounts completely inaccessible, creating indefinite limbo, worse than seizure psychologically. Offshore wealth revealed that public didn't know existed, exposing massive parallel holdings beyond domestic assets. Switzerland represented last refuge for offshore wealth. Legendary banking secrecy over centuries. Never cooperated historically when other havens fell. Ultimate safe haven that wealthy relied on. That tradition now completely broken. Swiss government quickly implementing freezes on foreign request. Swiss banks complying immediately without defending client privacy. Warren Buffett explained comprehensively that Swiss cooperation signals no safe havens remain anywhere internationally. If jurisdiction most committed to banking secrecy now cooperates, every jurisdiction will cooperate. Other offshore havens at risk, Cayman Islands, Luxembourg, Monaco, Singapore, Hong Kong, all will follow Swiss precedent. Geographic distance provides no protection in era of international coordination. Cannot rebuild offshore sanctuary when all jurisdictions cooperating under international standards. Frozen different from seized, creating worse psychological limbo. Technically still own money but cannot access. Indefinite uncertainty about whether we'll ever regain access. Proximity torture of knowing billions exist but cannot touch them. Worse than clean loss of seizure because cannot grieve and move on. International cooperation demonstrates global isolation. Multiple jurisdictions coordinating. Mutual legal assistance treaties activated. All countries working together. No division to exploit. No sanctuary to find. Complete international unity against you. Frozen accounts provide zero practical utility. Cannot pay legal fees or business expenses. Cannot manage investments. Cannot use as collateral. 6 billion effectively worthless despite existing. Practical wealth reduced to zero. Cannot rebuild what's been lost. Offshore relationships took decades to build. All jurisdictions now on alert. International standards require cooperation. Distance obsolete as protection. No safe haven remains anywhere globally. This proves definitively that offshore banking secrecy has collapsed, that Switzerland abandoning banking traditions signals global coordination, that frozen offshore wealth worse than domestic seizure, that geographic distance cannot protect wealth internationally, and validates comprehensively Buffett's framework that Swiss account freezing represents ultimate international financial isolation, where last refuge has fallen, no safe haven remains anywhere, international community acting in unified coordination. $6 billion exists but is inaccessible, creating cruel limbo, and wealthy individuals have nowhere left to hide assets from global enforcement, making Swiss cooperation terminal event for offshore wealth concealment strategies that assumed some jurisdiction would always provide sanctuary regardless of international pressure, but proved wrong when even Switzerland, country that built identity on banking secrecy, chose international cooperation over traditional financial privacy, abandoning clients to coordinated global enforcement. The comparison between Swiss account freezing and domestic asset seizures reveals why international enforcement reaches farther and creates more permanent isolation than domestic actions. Domestic seizures occur within single legal system where rules are clear and appeals are available, can challenge seizures in U.S. courts, can argue legal defenses under U.S. law, understand process and procedures, but Swiss account freezing involves multiple jurisdictions with different laws, making challenges exponentially more difficult. Must potentially fight in both Swiss courts and U.S. courts simultaneously, must win in all relevant jurisdictions to regain access. The multi-jurisdictional complexity creates enforcement that's harder to defeat than domestic action alone, and when enforcement succeeds in getting Switzerland to cooperate, proves that international reach extends everywhere, making geographic distance useless as protection strategy.